Gerard, thank you very much indeed for agreeing to join us in this, the 300th anniversary year of Adam Smith, who was born in 1723. And it's a very topical time and moment to ask you if you could kindly reflect on economic developments across the Asian region.
Roddy, well, thank you. It's great to be able to speak to the Asia Scotland Institute again. We had a very successful meeting a couple of weeks ago, so it's great to be able to do this webinar. Today, I'd like to focus on three areas in particular. First, the current situation in Asia and whether it will save the world economy this year, as I've been asked a number of times in recent weeks. Second, I will focus on China. And third, some of the more general themes across the Asia-Pacific region. But in beginning, I think it's vital to stress the size and growing importance of the Asia-Pacific. And that's relevant both in the longer term, as it becomes a more important part of the global economy, and also particularly relevant this current calendar year as it sees a cyclical recovery led by China. In terms of size, 3 of the top 5 economies in the world are in Asia: China, Japan, and India. Indeed, 12 of the top 40 Asian economies in the world are based in Asia, including South Korea in 13th place, down to the Philippines in 40th place. So Asia is increasingly important in global economic terms. But in population terms as well, Asia is also significant. 4 of the 5 most populous countries in the world are based in Asia. I'm sure you know them all. China, India, Indonesia, and Pakistan are in that top 5. But in addition, we have a number of other significant countries. So 9 of the top 20 in terms of population terms are in Asia. So the size is vital to take on board, as well as the breadth and diversity of the region. But in global economic terms, in terms of the current cycle, it's important to stress that we have had a number of shocks hitting the world economy throughout the century, most notably the global financial crisis of 2008, and more recently, the pandemic. Despite those shocks, the world economy has continued to grow. And indeed, the IMF's measure, the International Monetary Fund's measure of the size of the world economy, shows that back in the year 2000, it was just around $32 trillion in size. This year, it's going to be over $100 trillion in size. So despite all those shocks, the world economy continues to grow. And one of the reasons for that is the increasing importance of many of these countries across Asia. Indeed, take China alone. Between 2013 and 2021, namely on the eve of the pandemic, over that period, 38.6% of global growth had been accounted for by China alone. So as we look in this current cycle this year, Asia's importance is clearly significant. Now, one of the interesting aspects is that as we emerge from this pandemic, some of the real significant structural features that were in play before the pandemic struck are now coming back to the fore. The digital and data revolution, where Asia is taking a lead role in what many people call the 4th industrial revolution. The shift in the balance of power, which one has to say is to the Indo-Pacific, not just the Asia-Pacific. The Indo-Pacific stretches from India in the west, as one looks on the map, to America in the east, trans-Pacific as opposed to transatlantic. But on top of that, particularly relevant for us viewing this from United Kingdom, whether it's Scotland, the UK, or indeed elsewhere in Western Europe, secular stagnation, low growth namely, was a key characteristic of Western European economies before the pandemic, and that's likely to be the case now. Indeed, if one looks at the European Economic Community, as we called it when we joined it in 1973 in the UK, the 9 members accounted for 26% of the global economy. When Britain left the EU in 2016, the 27 remaining countries accounted for around 20% of the world economy. But on any conceivable, credible measure, within 20, 25 years, Western Europe will be down to about 10%, still important, but 10% of the world economy, less insignificant than India alone. In cyclical terms, though, what we're seeing this year is the Asia region being the strongest region of the world economy. Recently, the IMF, International Monetary Fund, revised up its forecast for global growth, having cut them 3 times last year. Within its forecast, which is still pretty cautious, not as bad as before, Asia is the most important region in terms of growth. At the end of last year, the Asian Development Bank released its latest projections of economic growth and saw developing Asia growing by 4.6% this calendar year. Indeed, last year was the first year in just over 3 decades where developing Asia grew at a stronger pace than China. So the growth is more broader based. Last year, though, importantly, Asia faced significant headwinds: a stronger dollar, rising global interest rates, a slowing China, and decelerating global trade. Indeed, the stronger dollar and rising global interest rates led to weaker currencies across the Asian region, adding to inflationary pressures and adding to the pressure for many countries across the region to tighten monetary policy, including raising interest rates at the end of last year. Weakness in China and the weakness of global trade in particular hit this very open region, in particular ASEAN or Southeast Asia, which is economists would say is a high beta region where its growth is very dependent on what's happening in China. Those headwinds, though, of last year have now become tailwinds. The dollar is weaker. Global interest rates are still rising, but are not far from their peak, maybe. China is now growing, and prospects for global trade are picking up. As a result, a couple of economies across Asia would be, in my view, in the 7% club. 7% is an interesting club. Economies that grow that 7% per annum over a decade double in real terms. India and the Philippines are in that group. Indeed, the Philippines finally is realizing the potential that many people have talked about. But a challenge facing Asia is the tightening in monetary policy we've seen recently. That will be working its way through the economies this year. That tightening in monetary policy, though, has been important in helping cap inflation. And inflation is now decelerating across the Asia region, although naturally one has to look at each country in isolation to get the true underlying picture. But let me just give you a few examples. India, for instance, inflation peaked in April last year at 7.8%. It was down to 5.7% in December, within the 2 to 6% target range. But the Reserve Bank of India just recently raised interest rates again, the repo rate up to 6.5%, and it's raised them by about 2.5% in total since last May. Reserve Bank of India sees inflation down to 6.5% in fiscal year 22, decelerating to 5.3% in fiscal year 23. So easing inflationary pressures. Bank of Korea, likewise, inflation peaked last July at 6.3%, is now at 5.2%. They've raised interest rates in total by about 3%, from low levels to around 3.5% in January. One could see the same picture across other countries. So let me just give you an example of Indonesia. The peak of inflation there was in September, but core inflation hit a 6-year high in December. The message is we've seen tightening in monetary policies, but even so, interest rates might be considered by some people still at low levels compared to where inflationary pressures might settle. So it's unlikely to be the case that we will see any easing in monetary policies across Asian countries this year, outside maybe of China. Japan, though, is important to conclude this first section because it's become very much to the fore in recent weeks. What we've seen in terms of the world economy is the world economy seems to have turned the corner in December. Sentiment has improved on financial markets. That's not just because of what's happening in the West, but it's largely because of what's expected to happen across Asia. In December, as I'll come on to in a moment, China started to open up post-pandemic. That's led to increased positive sentiment. In December, though, Japan spooked the markets in its change in monetary policy. Japan in the last decade has had a zero interest rate policy and more recently a yield curve control policy, keeping short-term and longer-term rates low and stable. In December, they widened the band for longer-term rates, But the message is that the Bank of Japan is still going to keep policy rates and longer-term rates low. Inflation in Japan was 4% in December, highest since January 91. Core inflation was the highest since December 81. So highest headline inflation since 91, highest core inflation since 81. This April, inflation might start to fall on a year-on-year basis. But what we're seeing in Japan is that with an aging population, real economic growth is probably on trend nearer 1%. But this year and next, Japan will be growing probably close to double that. Maybe 1.9% this year, 1.7 to 1.8% next year. Inflation, meanwhile, is likely to be around 2.5% to 3% this year and around 2% next year. So Japan is seeing stronger growth, slightly higher inflation, but I don't think it will significantly shift from its policy of keeping short-term and long-term rates low. But in the last few weeks, we've seen both the central bank in China and in Japan boost liquidity quite significantly, which has helped not only both economies, but also change sentiment overall. So to conclude, the first key message is about how Asia is seeing stronger growth this year, and that will help the world economy. What about China? Let me focus on China in this second section. There are a number of key issues to bring to your attention. In recent years, China has very much engaged in trying to restructure its economy. Now, a couple of years ago, when President Trump was leading the US, we had an increase in trade tensions between the US and China. Admittedly, we still have trade tensions now linked to President Biden, linked to semiconductors. But as a result of the tensions a few years ago, China moved very quickly to a clunkily named dual circulation policy. The domestic component was very similar to what we've seen before in China, trying to boost consumption and trying to move up the value curve. But in the wake of those trade tensions, China also announced it was seeking self-sufficiency in the areas of food, fuel, and technology. Very important. Then last October, Xi Jinping at the 20th National People's Congress highlighted 4 broad themes that are relevant for our debate today about the economy. One about common prosperity and the Chinese path, i.e. everyone sharing in success. Second, very much high quality development, not just boosting domestic demand, but in particular, bolstering the supply side of the economy, public and private sector alike, urban, rural, green agenda as well. Third area was opening up to the outside world, particularly in terms of services, and fourth, the peaceful path of development as well. Then in November, we had the demonstrations, the so-called white paper movement, and in December, the Chinese opened up the economy, and that's led to all the big focus on the tensions. But also in December was the so-called China Economic Work Conference, and that will set the template ahead of the March National People's Congress, at which economic and financial policy will be truly unveiled, not just for next year, but maybe for a few years. Now, Liu He, a couple of weeks ago in Davos, Vice Premier, reinforced this. He talked about the 5-point plan: economic development, socialist economic prosperity, opening up, the rule of law, and basically an innovation-driven development. So what should we expect? Interestingly, in December, the China Daily, in English terms, said there was 2 unwavering areas that came to the fore in December. Quote, to deepen reform of state-owned enterprises and improve the competitiveness of state-owned enterprises. These are very important in terms of helping fund the future social welfare system in China. But also alongside that, China is very keen for the private sector to play a role. Maybe the issues, given the time, I would bring to your attention are this: prudent monetary policy and proactive fiscal policy. The Chinese have kept monetary policy tight, but they've got scope to ease monetary policy slightly this year. Proactive fiscal policy, particularly linked to local governments, special purpose vehicles, shall we say, and basically allowing monetary and fiscal policy to work together. Interestingly enough, they plan to grow money supply and social financing in line with nominal GDP. So what they're aiming for is growth with low inflation. On top of this, to draw attention, they're continuing to try to attract foreign capital into China. They're also trying to stabilize the property sector. Admittedly, they've been trying to do this since November 2015, And as you know, they announced what the so-called 3 red lines in August 2020. Deleveraging the property sector, but trying not to re-engineer a speculative bubble. Technology sector regulation. China has talked about a resilient industrial chain. Some international observers fear that this might mean China becoming very inward-looking. We'll have to wait and see. But basically, it's about trying to build up their supply side agenda, and also how it all fits together with the rest of the world. The green agenda is very important within this. China has 2 key proposals there: to cut CO2 emissions so they peak by 2030 and to be carbon neutral by 2060. Some people fear that China's opening up will feed global inflation. That's always possible, but I think it's unlikely. But there's no doubt that there will be increased demand for oil and other commodities. The International Energy Agency in January feared that China's opening up could lead oil prices to spike up to close to maybe $100 per barrel. They were 82 to 86 at that time, but we'll have to wait and see. But one has to say, and I think this is important, supply chains will be working very efficiently. And so we will not see the supply bottlenecks that we saw before. So overall, China probably likely to grow 4.5%, maybe 4.5% to 5% this year. But very importantly, to conclude, China's future trend growth rate is going to be much slower than in the past. Its population is peaking. Its peaking population will, as we've seen already in Japan's sake, result in a slower future trend rate of growth. It's open for debate where that is. 4 to 5% maybe as we move through this decade, undoubtedly slower as we move through subsequent decades. Reinforcing the pressure to move up the value curve, reinforcing the pressure still to try and attract foreign capital in key areas. But I think I will leave it there to say that China will contribute significantly to global growth this year, at least a quarter, maybe a third of global growth coming from China in 2023. Third and finally, having looked at the first part of the current situation, second in terms of China, the rest of Asia. The green agenda is very much being led by China in some respects across Asia or East Asia, but it's an important underlying theme. But over and above that, I would say the other key regional themes are best capsulated by the letter D: debt, deglobalization, digital, and demographics. Debt, very important. Globally, public debt is at an all-time high. In the West, in the wake of the 2008 global financial crisis, we unfortunately opted for an era of cheap money with associated problems. Often overlooked, though, is the extent to which public debt levels, and in some countries, private debt levels, rose significantly in the wake of 2008 and even before the pandemic. Across Asia, public debt levels are high. Private debt levels also soared, led by the corporate sector and led by China. There are a number of small, high scrutiny countries, shall we say, who can't develop their domestic capital markets and so depend on external financing. The Asian Development Bank, for instance, at the beginning of last year focused on this theme, highlighting its increasingly important aspect regionally. Growth, they noted, at 2008 was around 8%, just pre-pandemic was around 6% across the region. Fiscal balances had deteriorated from around 1.4% of GDP back in 2008 to about 4% of GDP just before the pandemic. So the key issue there for you is to look at the relationship between rates and growth, and that those countries where they keep inflation down and therefore interest rates low and see growth pick up will be able to ease out of that debt situation if it's a concern. Those that can't will be in difficulty. So growth is key. And in some respects, China is increasingly focusing on that pro-growth agenda, and other countries across the region will have that very much in mind in terms of their own domestic agendas. Deglobalization, we are seeing fragmentation, move away from globalization. Onshoring, friendshoring has been talked about. A number of international companies have moved some of their production out of China. Some were doing that already because of cost reasons before the pandemic. Others are doing it for other geopolitical reasons now into maybe Vietnam or elsewhere. We are seeing significantly geopolitical changes in terms of the voting at the United Nations. In the wake of Russia's invasion of Ukraine, a G3 world emerged. Group 1, America and its allies. Group 2, China and its allies. Group 3, countries who would call themselves the non-aligned world, I would say. They don't want to alienate China. They don't want to be seen to be in America's back pocket. And this includes a number of countries across South Asia, as well as Africa, and 1 or 2 countries across East Asia as well. That leads on to the third D, digital, a big area of focus across Asia. Asia House in London did an interesting report on this recently. Cross-border data flows therefore become important, and it's part of that digital data revolution. And the final D is demographics. 4 countries in Asia are seeing aging populations. China and Thailand aging with relatively low income levels. South Korea and Japan aging with much higher income levels. Japan, with its Society 5.0, is at the forefront of using AI and technology to address the needs of an aging population. And that area should be very much focused on, in my opinion. At the same time, we see many young countries in terms of population dynamics across Asia, notably in South Asia. 1 in 4 people in the world lives in South Asia. Average age 27 for that region, so 1 in 8 people globally is a young person under the age of 27 in South Asia, highlighting the potential countries like India, Pakistan, Bangladesh, and Sri Lanka, but also highlighting the need for those, amongst others, to grow strongly and generate the jobs needed. So to conclude my talk to you, the Asia Scotland Institute, Asia is of increasing importance for the global economy. Its scale, but also its diversity. Its scale and size in terms of population terms and economic terms, but also very importantly, its relevance for global growth this year. In the 3 parts, I focus first on how the region will grow this year and how many central banks there have tightened policy to keep inflation in check. Second, I focused on the increasing role of China as it makes structural changes, but also post-opening up in December, post-pandemic, likely to grow 4.5% to 5% this year and slightly slower in subsequent years. And third, some of those key regional themes, all the Ds that I talked about. Thank you for your time.
Gerard, thank you very much indeed. I just want a couple of things quickly, bearing in where we are time-wise. The effects of Russia's invasion of Ukraine on food prices and on energy, that was not expected. Has that caused any sort of wobble? It's noticeable?
Well, yes. Well, interestingly, immediately after the Russian invasion of Ukraine, we saw a strange feature across East Asia in terms of the Chinese currency initially appreciating. It led to people at that time talking about whether this was a sign of an emergence of a new financial architecture. 1 world, 2 systems was the phrase used. The Chinese authorities, has to be said, didn't really seek to encourage that at the time. And also, often in previous times of tension, we'd seen the yen appreciate, but the Bank of Japan was trying to weaken the yen at that time. Yeah. But notwithstanding that, I think the debate at that time highlighted how an underlying theme we should keep a focus on, linked to digital that I mentioned, about digital currencies and about the evolving financial architecture. But more particularly, the impact in terms of commodity and other prices reinforced inflation shock and added to the pressure for Asian countries to tighten monetary policy. And the G3 world that I touched on in terms of the geopolitical tensions and how some countries, particularly in South Asia and 1 or 2 elsewhere, are trying to ensure that they are in, shall we say, the non-aligned group, third group, to basically reflect the sort of growing importance, not just of China, but also the need to sort of keep America on side, so to speak. So basically, the geopolitics have changed, but clearly added to inflationary pressures as well.
Good. Well, Gerard, thanks. Can't thank you enough for that very interesting overview of the situation in Pan-Asia. And we will all have to see how the rest of this year unravels or turns out to be. So on behalf of the Asia Scotland Institute, thanks so much. Very interesting.
Pleasure. Great to talk to you. And you can follow my views always on netwealth.com. and I write regularly there if you want to keep up to date.
We'll post some stuff from there. Thanks, Gerard. Bye bye.
Bye bye.